Emerging markets are once again drawing investor attention, but not for the reasons you may be thinking. As global dynamics shift and new growth stories emerge, the case for EM exposure continues to evolve. So, what's behind this renewed optimism? Could it be tech-related? And what should investors be watching out for next? All that and more right now on UBS Trending. Hi again, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for joining us today. Being back in the studio with me today is Chief Investment Officer for Emerging Markets here at UBS, Alejo Cherwanko. Alejo, welcome back, and it's an exciting day because, as we were just talking about, you and your team have officially upgraded EM equities to attractive, which it's been a while since we've seen that rating on them. So talk about the convictions behind that change.
Yes, it's so good to see you, Anthony. Happy to be back in the studio. Let me start by highlighting that the world is being somewhat kinder to emerging markets these days. The Fed is cutting interest rates. The dollar is weakening. This is good news for the developing world. Why? Because emerging market currencies strengthen. Emerging market central banks can accompany cut interest rates, support their economies. But what's most important for an equity investor, companies are delivering. In 2025, we think earnings growth out of emerging markets is going to be roughly 10%. Next year, it can go up to closer to 15%. And all of this in a context in which emerging market stocks aren't expensive. Actually, you're buying EM equities at a 40% discount to S&P 500 in terms of price to earnings ratios. So, look, the world is changing. Your portfolio should be changing with it.
Yeah, it's good to see that valuations are attractive in the EM space, as you were just talking about, Alejo. I want to kind of just go into, because some of our investors or people out there who are watching this may be familiar with our conversations, and they may not be as familiar with what EM has historically been to what it's becoming or has become. Talk about EM of yesterday versus EM of today and tomorrow.
Totally. So I think many people think EM is commodities, right?
Historically, that's what people would have thought, right?
And that's right, but things have changed.
Yeah.
Today, when you look at the composition of the emerging market stock indices, it is close to 50% tech-related. I'll give you one very concrete example. Without emerging markets, there's no NVIDIA. Think about the majority of NVIDIA chips today, vast majority, are fabricated, manufactured out of the emerging markets, right? So this is the world's most valuable company. And you got to recognize that it is sitting on, right, technological developments out of the emerging world. So that's one thing to consider. The other, Anthony, is from a geopolitical perspective, from a geoeconomic perspective, things are evolving very, very fast. And you want to have a good amount of geographic diversification. You simply don't know where the next war, policy mistake is going to come from. And we've talked about this in the past, Anthony. I think the lines delineating, separating emerging and developed markets are blurring.
Right.
It's not clear what's which, right? Let me give you one concrete example. Fiscal responsibility, debt sustainability. And I give you two sets of countries, the UK and France, Chile and Malaysia. I would argue the more fiscally responsible debt that is more sustainable is in the hands of Chile and Malaysia, not in the hands of the UK and France. So this is a weird world.
Yeah.
And your portfolio cannot be constructed based on historical priors.
It's so interesting. I love talking about the emerging world with you because you're right. We have had conversations where I think some people out there might not even consider China to be an emerging market because of the number of billionaires there and the amount of technology and corporations that are there, but it's still considered an emerging market. So it's interesting to kind of see how even you, as the CIO for EM, are talking about how the lines are blurring. What I want to dig more deeply into with you is because there are so many EM countries and particular regions. So when we're telling this story and moving that to that attractive view on EM equities, what regions, what countries are the ones that are really succeeding here?
spot on. Emerging markets are very heterogeneous across them, and so you got to talk specifics. You discussed China. We are constructive. The outlook for China, in particular, its tech sector. We're seeing a lot of innovation, a lot of competition, all of which is being supported by the Chinese government. Concretely, in 2026, we think China tech can deliver earnings growth of roughly 35% year over year. This should be supportive of total returns in the country. Another geography, Brazil. You can buy Brazilian stocks at a very depressed 9 times price earnings ratio. This, we think, is not justified by fundamentals in the country. We will likely see lower interest rates out of Brazil in coming months, better politics as we approach the 2026 general election. Finally, Anthony, India. We still like India because of earnings growth dynamics supported by reforms. We're seeing a simplification of its goods and services tax cuts across the country. That's another place to keep a very close look at.
Yeah, and there is potential for more monetary easing in some of these countries, correct, when it comes to their version of the Federal Reserve here in the U.S., their banks. So that's also a part of the story, correct?
Absolutely. When the U.S. dollar weakens, this eases financial conditions in most of the emerging markets, giving EM central banks more space to reduce domestic interest rates and support their economies.
Great. Before we wrap up, there's always the side of the story that we have to ask, which is the risks that are potentially involved. You mentioned at the beginning of our conversation, geopolitical risk is always potentially there. There's always some back and forth with U.S. and China as far as deals and imports, exports. So what would you say are some of the risks that you're looking out for that we should let our viewers know about?
That is absolutely central. The U.S. and China are not getting along very well. They're unlikely to see a meaningful improvement in their bilateral relationship, so you got to follow this one super closely. And in addition, if you see the U.S. Fed not easing, but maybe pausing or even hiking, this won't be good news for EM assets. We think that is unlikely, but something else to keep in mind.
Great. Alejo, thank you so much. Always good to see you. And exciting times to be talking about EM, especially as we just talked about moving EM equities to attractive. So lots more conversations in the space we'll have over the next few months.
Thank you for having me.
Great to see you. Alejo Chawanko, Chief Investment Officer for Emerging Markets here at UBS. And thank you all for joining us for another conversation here on UBS Trending. For more information, you can visit our website. This is our insights page at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn, Facebook, and you can also follow us on Instagram. UBS Trending. There's great content that we're creating here with our studio team that you can find there. And as always, if you have any questions about what Alejo and I spoke about today, please make sure you're connecting with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon, everybody. Thanks.